Oh, we're live. Hi, Maria. Welcome to Ventures Grace.
We are live. Glad to be here.
Okay, before we start chatting about the amazing journey you had at RRE Ventures, I want to give a quick shout out to our amazing sponsor. This episode is brought to you by Vervin. If you are a GP or LP looking to simplify the capital raising and deployment process, Vervin is here to help. Trusted by over 800 funds and managing more than $2 billion in transactions, Vervin offers a secure, streamlined payment platform designed specifically for private capital markets. Say goodbye to manual reconciliation and repeated follow-ups. Raise and deploy capital faster and with greater transparency. Ready to make your fund operation smoother? Visit Vervin.com, but actually use our bit.ly link down below and see how easy it can be. Okay, so to start the show, I want to give the audience a little bit of your background. So you started your career at GE Healthcare, and you have co-founded a company which is like a direct to consumer clothing company, and then you have worked as like the chief of staff before you getting into venture. Why don't we start with like what were some core lessons that you've learned early on in your career that kind of shape you into who you are today?
Yeah, I mean, so many, honestly. I think at GE, there was a lot of business fundamentals, but I think one of the lessons across all three of those experiences is just pretty much everything in life is the people you surround yourself with and the environments to make them thrive or not thrive.
Mhm,
And it's hard to get both of those right, but it's kind of that simple. And I feel like
mhm,
I was in a number of different teams across those experiences where we created culture in good ways and bad ways. And I think there was a lot of lessons learned for me about kind of how to
mhm.
surround myself with people that I love building with and kind of work with exceptional people and bring the best out of them. That's the idea.
Totally. I wonder, maybe we could start with like, I feel like you so now you're a GP at Freestyle Capital, and then but like before that we are just briefly chatting about the RE journey, and maybe we could cover a little bit more about like, since you have worked at RE Ventures and Kindred, and then now at Freestyle, like what were some like differences between like the funds, and then like what were some like kind of lessons that you've learned through the previous investing journey that you kind of like apply into Freestyle today?
Yeah, I mean, I've been super lucky that most of the funds that I've been at have been pretty strong in their own convictions. So there's a lot of the market that kind of moves like FOMO and follows each other. And I've actually always been at funds that don't typically do that. And they just
Mhm,
kind of believe in building your own conviction, which I think has been a great muscle for
mhm,
me.
mhm,
And I think, I mean, RRE was very much Series A more than seed,
mhm,
some a little bit of seed, but more Series A.
mhm,
And then since then, I've been kind of pre-seed and seed for the past two funds and for many years now. It's interesting. I think the hierarchy and the structure is different. So a lot of big funds
mhm,
have GPs and partners and principals and analysts, and I think that can work really well depending on your strategy.
mhm,
The last two funds I've been at, it's just been GP only models. So I
mhm,
do everything: source, work with companies, sit on
mhm,
board, fundraise, help
mhm,
run the fund with other partners. And I think I really like that personally, especially at the earliest stages. It's so much about
mhm,
the team. And so I like sort of being the one in that first meeting, but at the same time, it means that it keeps my calendar very Tetris full, and it
mhm,
keeps it exciting. But I think I've learned a lot more. I think how to trust my gut and how to know what types of
mhm,
founders I've been looking for, and also how to like thesis build in different spaces, which is kind of having enough data that you can win the best founders, but not
mhm.
being stuck on your view of the future that you're not being open to what's changing.
For sure. I wonder, maybe we could maybe if you could elaborate this a little bit more, because I feel like being like only GPs in the fund, like, that's like very interesting, because like, obviously I feel like most funds like on our show are like either unless you're like solo GP or like there's only
Yeah.
two GPs in the fund, like it's like everybody have like a full stack of like people. And
Yeah.
why do you guys like decided to go like no associate, no like other support system, but just go for one? Uh,
So I think I was at Kindred before this, and I think that shaped a lot of how I viewed it. One of the founding partners there was the first hire for Benchmark Europe before it spun out as Balderton, and I think a lot of
mhm,
the ethos is very similar. But I feel like when you think about the earliest stages, and it depends on your strategy, right? Like we're high conviction, so we don't spray and pray. If we had to see everything in the market, I think it'd be really hard to do it
mhm,
without associates. And I do think you have to find other ways to surround yourself with really smart young people. So I share a lot with other associates and work with a lot of micro funds, and I think we do that in other ways. But I think
mhm,
as a partnership, it just allows you to move really, really quickly
mhm,
in decision making, and that can be incredibly important these days. And I think it also hones your own judgment, and it keeps you really honest on sourcing. I think sourcing, I like to think about sourcing as jet streams and being in the right jet streams. And I think it kind of forces you to really be refreshing your networks and being like constantly thinking about who are the right founder networks and operator networks to hang out with. And so I think it's just a different model. I really like it. It suits me. But I think it's definitely different than what a lot of funds do.
For sure. I wonder, maybe we could start like since like you mentioned about like your Substack, like I feel like you also had a podcast back then. So like I wonder like how do you think about like putting out your thoughts out there? So I feel like maybe we could start with you just started the Substack last week. Maybe we could talk about like things that you plan on writing about, or like, what are something that, how do you kind of like collect your thoughts? Because I feel like sometimes like seeing like 500 different companies in different spaces, like especially in the AI like era, like everybody is building some sort of like vertical AI toolings. There is trends, but I feel like it's like very hard to actually summarize something into like trends. So how do you kind of like collect your thoughts to reflect it into writing?
Well, maybe I should get advice from the person who wrote books and is running this podcast.
Oh
But
my
I
God.
actually, I'm definitely bottom quartile on brand building. I ran the podcast Founders Uncut when I was in Europe, partially because I feel like there wasn't enough honest media, especially in Europe, about like how hard it is to be a founder. So what I found is like in SF and New York, you have a lot of density, whereas in Europe there is density, but it's spread across so many cities that, and a lot of people are still reading TechCrunch and Andreessen's podcast, and they're still getting SF news as well. And so there's a lot of like, there's even more imposter syndrome because it looks like everyone's doing well. But if you're actually in SF or in New York, and you know those companies, you kind of know like, okay, that made the headline, but that's not really real, or you know the inside gossip, right? And I feel like it even created more imposter syndrome for people in Europe because it's like, why is everyone else doing well and it's hard for me? Like it's just hard all the time as a founder. And so I created that podcast for that reason. And we had some incredible guests on. Totally transparently, I like was doing it often during my second maternity leave, and we were fundraising, and I was just like, you know what, we're just not going to do this for a little while. But I've gotten used to it again. So it feels like it's almost like we're in an attention economy these days. And if you're not writing, I've kind of reframed how I think about brand. I used to not write more because obviously I do have a lot of thoughts, but I used to think about it as like selfish or like putting my view out there. And I'm like, founders don't need another random VC take at this point. But I feel like it's also kind of, if you know someone in person, then you have a sense of who they are, what they care about. And if you don't have that same digital presence, then people who don't know you, right? And so I'm just kind of writing from the heart, I guess is the best way to say it. So I call the Substack Unconstrained, and it's kind of about how like a lot of times we constrain ourselves from doing our best work, and we have a lot of thoughts that are like limiting narratives. And it's actually been really easy to come up with stuff. I feel like I'm like constantly thinking about stuff anyways, just putting it into writing. So I'm writing a lot about like my theses in AI, and like one of the things I'm writing right now is about AI and deep science and why there's a lot of defensible data in that area. And I wrote about kind of the probabilistic nature of LLMs and how that's affecting agents today last week. But I'm also just writing about like honest VC takes after a while. Like I think the most, I wrote a couple things last week, and basically what happened is one of my founders, I was complaining that I'm so bad at brand, and he told me that I should take his accelerator. So I am, and it's like pushing me to write more. But I wrote about like what I've learned in VC and how I used to be more prescriptive. And I think that's actually not the best way to support founders. And I think that kind of stuff that's sort of like more general and topic is also like, you're always having those conversations. It's just putting it down in paper,
For sure. I wonder, maybe we could start with like, I feel like you have also kind of, I wouldn't say rebrand, but like I feel like you kind of styled like where you invest. So I saw like a bunch of like your past investment are around fintech. Obviously, like RRE is like famous for fintech as well. And nowadays, like I feel like it's AI and robotics, or like for like drug development, or for like AI native companies. And obviously you're like angel for Lovable. Maybe we could start with like what made you decided to pivot into investing like a completely different subsector, and then how did you kind of like relearn or like regain the knowledge for yourself to understand the industry? And obviously I will have to ask like, how do you get into Lovable?
Yeah. Well, actually, yeah, it's there's a woman who I almost backed as a founder in London, and she's an amazing software engineer. She was going to found a company, and instead she joined OpenAI as one of the early coders on the ChatGPT product. And I was having lunch with her in London around the time the ChatGPT was just taking off from a consumer perspective. Like we all remember the ripping moment of 2023. And I just told her, it's funny. So I've done a lot of fintech infrastructure over the years, and I told her, what's funny is I just feel like this is so transformational. It's going to be everything. But like, what right do I have to win? Like, I haven't been the machine learning engineer, like on the cutting edge of AI research for the last 10 years. But we've all obviously been around it in venture. And she was like, just go learn it. If you learn crypto and you can't code, like you can learn this. And I was like, you're right. And I basically rejiggered my whole year in 2023. And I went and read tons of papers, and I talked to cutting edge AI researchers. And I basically just went really stupid. It's kind of the same way I learned crypto. Like, you just start with really stupid questions, and then as you go, you get better and better questions, and you get to better and better interesting people and thoughts and fields. And so I kind of came up with 6 areas of AI during that year. One of them was around code generation. So I was actually, I was an early angel in Lovable, but we should actually have 9% of that round. Very painful still, but it's, we were there basically like way before he launched. And so, but it was very obvious that he was a special human being. And it was part of my thesis around code gen, but I did actually quite intentionally, to your point, be like, I'm just going to put all my energy here. And I think I had learned, like, in the crypto cycles, I always joke, but like crypto people, I've been in crypto since 2015, consistently 30% of my time, which is kind of unusual. Usually you're like 100 or 0. And you have to get comfortable knowing that you don't know everything. And that's kind of like, I don't know, I also liken it to like my husband's Italian, and I had to learn Italian from my mother-in-law, but there was like a long period there where like I just missed stuff in the conversation.
100%. I also, like, back in time, like I think I was like the OG people who post on LinkedIn about crypto, because like obviously Twitter is like all over the place with the crypto rush basically. And then I remember listening to the Bankless podcast. It was like literally even the commercial, I don't understand what's going on. I feel like it was like such a self education era, as like it is learning a different language, right? So it's kind of like learning Italian. It's like you have to fully understand what the hell's going on, because like a lot of the terms are like so like niched. I don't know. Like I remember there was like literally the crypto rabbit hole like notion or something. It was like explaining people what is a hash or something.
Oh yeah, I mean, I got into it in 2015. Bitcoin was $200 before CoinDesk, and it's interesting because I remember in the early days, like, I hate this analogy, but it's kind of accurate. Is like when dogs meet each other, they sniff each other's butts and they like check each other out. I feel like crypto people in the early days would do that. And like if you didn't know the latest term or the latest thing that happened like 2 days ago, you were like, it was like, who are you?
Exactly.
But I feel like after doing that enough times and like staying in crypto and having some great people and some good investments, I feel like I just got comfortable knowing that I'm not going to know everything, but as long as I get comfortable that the theses I have and the people that I back are really strong, it doesn't matter. And actually having like a generalist view, it keeps you honest about the talent bar that you have to back. And so I really like that. So when I did it in AI, to your point, it was very intentional. I kind of tripled down on all AI investing. And you kind of only need like 3 or 4 good investments, and then it kind of turns, meaning, and it's funny because I feel like everyone in SF is an AI investor right now, right? Whatever you were before. And so I think I did kind of pivot quickly though, just because I had seen that in other cycles. And now, in the last year, I've led 7 investments. They're all AI. Most of them are deeper tech component than just application layer, but a little bit of both. And one of them has a fintech angle and the rest don't. So like, it's kind of just getting comfortable with where your conviction lies. And I think the main key is not even like spaces, but what type of talent do you think wins in this new market? I think that's a question you really have to answer yourself.
Oh yeah, I totally agree. Because I kind of feel like I wonder. Since like by the way, I want a quick shout out to the audience. Hi, Miguel. Hi, Fred Wasm. Fred Wasm. I'm sorry. I don't know if I pronounced your name right, but anyway. So I wonder when it comes to like, I guess like when you're saying about like identify talents, right? So like everyone's gonna fight over these like first like 50 engineer from like OpenAI, but like beyond the super like popular criteria or like the box to check, like I guess like who do you think will win the talent war in the AI era, or like not talent war, but like who is like the best builder?
It depends on the space. So actually, Anton has a lot of thoughts on this. He just shared some on 20 VC about, yes, the researchers you need for the models are different, but like the software engineer is so different. Let me give you a couple examples. Like I backed a company called Dash Bio, and they're just very uniquely qualified to build they have enough AI knowledge, but they also have knowledge of the space that they're building in, which is the biospace, contract research organizations. Like they have depth in that. So in that space, it's really like getting people who have the DNA of both those things together. But then another spaces, like I'm not a consumer investor in general. I mostly do B2B and infrastructure, but I always joke I end up doing consumer by exception for exceptional founder. It just ends up happening. And I backed a consumer company in the AI space. They're incredibly like consumer obsessed, and they're also very technical. They built their own inference layer. They like replicated the NVIDIA NIMS product. Now, could I argue you don't have to do that to build what they're building? Probably. But I feel like in that particular investment, my thesis is that this team is so good at both the consumer and the techno, they're just going to iterate faster. Like they're not wrapper on top of ChatGPT. They're not going to get throttled by whatever rules get applied there. I think any consumer investor remembers very vividly when Facebook changed the rules a couple of years ago. And so like, it's more about like, what is the profile I think wins in this space? And that can be very different across spaces, right? Like I invested in this AI holding company called Infinity, and they're basically attracting like serial entrepreneurs, like almost think YC, but like Berkshire Hathaway as well. It's like experienced founders coming to build AI services companies together. But because of who they are and what they built for the past 10 years, they can attract a 13-time founder to come build with them instead of raise venture. But like not everyone could do that, right? So I think it depends on what you're building truly.
I wonder, so like for like a Lovable, since you mentioned about like, you were like digging into the AI space, like I guess like from the sourcing perspective, since you I really like what you mentioned about like, you supposed to have some sort of like domain expertise knowledge plus like AI / like I guess like the deep technical domain expertise. But I think like to identify like something that could become like huge, is there like a sourcing strategy that you personally take on to like source, like, or like do you read, since you mentioned like you read research paper, or like I feel like living in SF, like it's basically talent everywhere, like all the companies look like it's very hard to pick because everyone have like some sort of like pedigree or like in some way very correct. So like how do you kind of identify among the pool of like who will actually build like a sustainable company?
Yeah, I mean, I think that's the hard question, right? I think, and that's what we all hope we're good at, and we don't really know. I would say people over rotate to whatever's worked in the moment, right? So like because Ricker and Cursor took off and those founding teams were like younger, then everyone rotates to younger. Everyone kind of over rotates in the moment. I think you can't really also underestimate the value of outside perspective. So there's this great piece on the person who made Citizen Kane back in the day, and he talks about like sort of the great combination of like ignorance and expertise together, and how like that marriage is really, really powerful. I think you can come up with ideas about the future, and you can read papers. Most of the research that you do is just talking to founders, right? Because it's changing so fast on the front lines that you kind of have to be talking to people building right now. And I think everyone has conviction what they're building. I think it's the right founders convince you that it's going to go that way. And I think a lot of them, like, I don't know, I care less about pedigree. Maybe that makes me wrong or different. I don't know. But I find that most founders, I don't look for traits. I mean, I do kind of, but in different ways. But most of them like have done something very different, have thought about something very different. And they almost like see the future like it's completely inevitable and like it's going to be that way. And they can very clearly articulate their vision, but they also know when to kind of like follow their gut and when not to. And I think that skill is one of the hardest things for founders to do.
I wonder, maybe we could I like that, like people like pedigree is like not technically everything, and then obviously there is like a lot of like identifiable things that are like it's like maybe like overlooked by others. So maybe we could start with like leverage, like maybe just like use any of your portfolio company as an example, maybe Dash Bio or like Infinity or Cortex, on like how do you, maybe if you could walk us through like how do you find the founder, to how do you kind of like diligence the deal to like maybe winning and thinking about exiting.
So, I mean, we can take Cortex. It was a recent example. I think it's a good one because Marco is I mean, the whole team is great, but Marco is the founder. He's incredibly talented, technically brilliant, and he's kind of built and sold a company at a smaller scale before. But what's amazing is if you look at the things that he did at the age that he did them, if he was in SF, it would still be crazy and impressive, but it would be like a little bit more normal. It's kind of like how YC used to be like, we're dropping out of high school used to be a crazy thing when people did it, but now like it's the new McKinsey, right? It's the new like stamp of approval from everyone to like drop out and go to YC. It's literally like the new playbook. So then doing it might make you a great founder, but it doesn't make you shirking the playbook. It is the playbook today. And so like When I think about Marco, he just did many things in his youth that, like, given his background and where he was living at the time in Germany, like that was not typical. There is nothing typical about that. And I think that, like, he just kind of followed his own passion for building, and it led into some really interesting places before he built this company. And I know that this company is going to be incredible. So I first met him through someone who knew him really well. I mean, my kind of initial sourcing, it can be everywhere, right? Can be events, can be friends, can be somebody I find on Twitter or X, whatever we're calling it these days. But I find that it's always first the founder. So I spend a lot more time on the person and the personal story in the first meeting than the deck and the business. So we usually do that second. But I spent time with him, and then I actually spent like time with him almost every day during the process. And sometimes it was more on him, sometimes it was more about the business, sometimes it was more on selling what we could do for him, and what it might be like to partner. And I love to be the first term sheet, preferably, but in this case, we were the second, I believe. And then we went into winning mode, which is really just like trying to understand what he's optimizing for and help him get it. So in this case, he really wanted to work together, but he also potentially wanted like a multi-stage brand, which he will probably do for the A, but it was a debate around like enterprise agents. Do we want that? Do we not? And so I took a little bit of a risky strategy and said, like, great, like my job as your investor is to try to help make your dreams come true. Like, let me try and give you that. Like, you don't have to tell me who else you're talking to, but give me like the top 5 names of people that you want to meet that you haven't, and I'll find a way to get you to them. And so we did that. And anyway, the round ended up working out for us, and it's an incredible company. But I think the diligence of the space we talked to people in enterprises, but we have quite an active view right now of like what enterprises are doing with agents, because we've been spending time there anyway. So that was kind of easy. But I mean, the stuff that goes in our memo is pretty typical of anyone's memo, which is really team, references, market thoughts, diligence. But I would say we do have to believe in the market and the ability to win it, but the team is like overpoweringly more important.
I want to maybe double click on, like, maybe if you could give the audience a little bit more about like what they're building on the agent side. And then obviously, like, as you mentioned, like the person is a second time founder, he had acted before, and then he seems like super young. But I guess like maybe we could start with like, also, like, I guess like for the diligence process as like reference call, who would you be calling from? Obviously, maybe the 5 people that you introed him to, like, obviously will probably provide some like sort of like feedback and stuff. But I guess for the earlier stage companies, like what would be some like good metrics? Because obviously you're looking at the SaaS space. Like, so for example, I feel like for angel investing is like probably very different than funds, right? So like, I mean, I feel like any track that's like you're writing from a fund perspective, like there's definitely more diligence to it than like, backing like someone just like looks very cracked on resume. So like, how many reference call do you have to call before you feel very comfortable with it? And the other part is like, who would you call from? So like, for example, if you meet their clients, like everybody is like, oh yeah, we're using this as like, I don't know, foundational layer or something. Like, what are some like things that you would look for in these like kind of feedback? And then who would you even ask these feedbacks from?
Yeah, I'm happy to share there. Keep going with that example if that's helpful. What I would say is we just on the data for a second, maybe this is a hot take or people disagree, but I think data is kind of useless. Like, I do look at it. It's sometimes helpful, like unless you just went from 0 to 8 million in 3 months, like if you're kind of just slowly growing, which most businesses are at seed and pre-seed. I think at the Series A, data becomes useful, and beyond it is, but I just think data is like a false sense of security at the earliest stages. Like getting from 0 to 1 million, I'm not saying it's not hard to do, but like that is not the really hard part. The really hard part is building something insanely huge and scalable. So if you're not backing someone that can't get a couple first clients, hire a couple incredible people, like you're already backing the wrong person by a long shot. So I feel like it's like a false sense of security. So I don't care as much about the metrics personally. There are exceptions to that. Like if there's a space that I really doubt the space and maybe I want to see some adoption because I don't believe the adoption is going to come, that could be one. But like most of the time, the data is not swaying me. It's more the person and who's on the space. In the case of Marco, yeah, I mean, I'm sure I don't really care so much what other investors think. I really think you need to have your own conviction. So if I was more interested in him to help him, not to help me have a view on him. At that point, I already decided to give it a term sheet. For me, the references I did were some of the ones he gave me, which were prior people that worked with him, customers developers, yes. And then I also, in his particular case, he's such an incredible developer. He had actually worked with Anton early at Lovable, so I could talk to Anton about it. But then also, he just knew, and he really quickly got to some of like my favorite, the smartest developers I know in SF, and I was actually incredibly impressed with how quickly he got into those circles, and how much everyone respected him in those circles. And so that was a big data point to me too. But I think in his case, I probably did like 6 reference calls. Sometimes it's 2, sometimes it's 10. It really depends, I think, on what I'm trying to understand. So like, for example, I backed a cyber company, and one of our questions was around go-to-market and how that played out. So I spent a lot more time diligencing the go-to-market in that company and like what I thought the market was going to do than I would have otherwise. But I think no matter what, on reference calls, whether it's personal reference calls or customers, with customers, you have to be very careful because you don't want to like screw up a customer for a startup, but you do get honest takes. Like I've done customer calls where like, yeah, I don't know, we're trying it. We probably won't really use it unless it does X, Y, Z for us. And like, I'm always very positive about the startup on the customer reference call, but you can get interesting details. And then on the personal ones, I think it's actually really important to just push at like what they think of the person, the goods, the bads, how to make them thrive. But I think unless you really push on a reference call, you're probably not getting what you really want to get out of it.
I wonder, so like since the company that's like AI agent operating system that helps with the workflow, like how can you talk a little bit more about like the on the product side on like,
Yeah.
what are they building? And then since like on the website there was like very vague.
Well, so Cortex.ai is just they're doing, the website doesn't have that much. They're doing a lot of enterprise back office automation workflows for companies, and they already have a few people that are interesting customers. And then they also have an open source project called Suna.so, which is basically an AI employee. So you can probably see more from the Suna.so page today than the Cortex AI, which is more the enterprise brand. But they're effectively doing very similar things. And if Marco could clone himself, technically they probably would have even more of them live today. But that's sort of a little bit on the product. I think on the customer side, one of the things that we spent time diligencing on this particular company was where do we think they play, enterprise, mid-market, and how do those things play out? And I think we got comfortable that there was a couple different ICPs that were very interesting for them to go after on day 0 and also on year 10.
For sure. I wonder, so when it comes to like, um for example, like maybe we go back to the Dash Bio situations. Like I guess like for AI and robotics, maybe if you could walk us through like, what does like the market landscape kind of look like for the AI bio industry? And then maybe we could talk about like, how do you kind of like do the mental map on, from let's say you chat with like 10 companies in the like bio space, like which one that you kind of feel like would be the most like meaningful, and how do you kind of like do the market mapping, and how do you kind of like evaluate if a market would actually work?
Well, I think the hardest is sometimes like in the case of Dash Bio, you have a general view, but then like I didn't know contract research organizations so specifically. So like you have to get smart on a space really quickly. I think in that case, I did like a lot of market deal. I think I probably did like 20 calls in 3 days on the market specifically. But if I back up, we are still refining our robotics thesis and like where do we believe in sort of autonomous, where do we believe in humanoids, where do we not, where do we believe in the software layer, where do we believe in the hardware layer, and depending on which area of robotics, we have different kind of points of view. I just actually also got close to investing in like a single purpose autonomous vehicles for landfills, so like very specific type of play. I, at my last fund, Kindred, 2 of my partners were incredible in the bio space and led some great investments like Cradle Bio and a company called Leighton Labs, which is the ex-DeepMind founder, building proteins. And I think that there, what's really interesting to me is that the data is, you can't get it online, right? Like, and so as I think about what happens with AI and bio, one of the reasons I was excited about Dash Bio, aside from the team just being incredible, like the team was incredible enough that I'm like, I got to learn this fast. But a lot of the innovation has been happening around sort of discovery and new drug discovery. And I did back something called Dunia in Berlin around new material discovery. I actually think drug discovery has a lot of reasons to still exist in the pharma companies. And there's companies like Potato is a company I like that is enabling.
Oh, yeah. So I chatted with the Potato AI founder like maybe like 4 weeks ago, and then he's coming on the show next week.
Yeah. Oh my God.
Yeah,
So
and
yeah,
I'm going on to his podcast. So
we got very close to investing there. It's probably going to be our anti-portfolio. I really like that team. But they're helping pharmas find like AI employees, for example. But I
mhm,
do think a lot of discovery is just going to happen from the big LLMs, quite frankly,
mhm,
and from big pharma working with the big LLMs. And I think people like
mhm,
OpenAI have already shown that they're going into that. And I honestly think that quantum is also a huge unlock for that. So I think there's going to
mhm,
be a lot of competition around discovery, and there's a lot of people who like naturally want to own that space. And as you get more drugs being discovered, you want to get them to market faster. There's a ton of bottlenecks and very little innovation happening in the development phase of the drug. And so what I loved first about Dash Bio after the team was like, that's what they were tackling. They're like, how do we make that phase more innovative, smarter, faster? And I think you have to look at like, what is the true secret sauce? So a lot of the Dash Bio, what they're doing is some things we would look at, the robotics is by itself differentiated. That is not
mhm.
the case with Bio. Any contract research organization can go out and buy robots, and they're off-the-shelf robots, but they don't because there's a ton of misalignment and incentives in the way it's currently being done with humans and the way that the billing and the pricing models are structured. But also, they just they don't think about the whole thing the way the Dash Bio team does. Like they have a lot more sort of secret sauce around data and workflows and how to do things that make the entire process more accurate, faster, cheaper for their customers. But like you kind of have to have the mindset around the entire thing. It's not just the robot, if that makes sense.
I have so many questions there just because I feel like in the adjacent sector, like there's like I feel like YC company that are doing something like, AI drug discovery. And then like, there's also people doing from like the research and or there's like people revamping how basically making the full like research lab more AI. So like I feel like there's so many small subsector that you could totally go into. How do you like I guess like process like, obviously I feel like how deep the founder understand the space is like something that's like definitely a differentiator. But like I guess like how do you think about since like there are Dash is like doing like custom development of like these like bioanalytical biomarkers. So I mean, like I'm not personally like an expert in the biotech space, but I guess like how deep do like I guess like how like basically how does the money flow in the industry, and then how do you identify if this company is like actually like won't have like much challenges from whether it's like the government or approval process. It sounds like everything all mixed
Yep.
together. It's like very hard to explain on like the entire biotech space. Like I guess like how does the money flow, and then how do you feel like this company would actually capture like the
Yeah.
billion-dollar outcome
So
versus
they don't need to be regulated, right? Like if you're going for a specific like enzyme, or there's a lot of things that could be regulated. So
Mhm,
anytime I get to a bio investment in general, it's kind of back to our language analogy. Like I feel like before I went to Kindred, I would never have touched bio because most people
mhm,
like you're either bio or you're not, and there's a very good reason for that. I
yeah.
feel like I got comfortable enough in bio as like a language where I will never ever be fluent, but I can be like, where's the bathroom? So
Mhm,
if I'm going to do a bio investment, I always go to people who are experts, and I have a couple of people now where like I just trade with them and we share ideas and we kind of go back and forth on theses. And so I think I would always go to people that I trust in bio more than me. Sometimes I go to people that the founders give me as well. And you have to have a point of view on like whatever they're exactly building. So basically, if I mean an incredible team, like in the case of Potato, I love the team. I thought the team was incredible.
mhm.
We were having a bunch of debates as a firm about what's defensible and what's not and how it plays out. And so we were still coming up with our thesis on the space. But I think once you get some clarity around what you think is going to win in the space. So in the case of Dash Bio, the contract research organization space is massive. I
Mhm.
mean, all these companies are billions and trillions of dollars at this point. And I think the bigger thing that I was underwriting was like, what does a new version of this look like? What does the margin profile look like? Will customers do it or not? It was more of that kind of thinking. And I didn't see that many players going after that specific sector, right? I think when you start to get to like specific drugs and targets, and there's more complex biotech, and I often leave that for other types of people and do more of the platform plays, but it kind of depends on the team. And then I have broader views, and then I get very specific views when I'm looking at a deal.
I wonder, so like, for example, in your memos, like, what would you really emphasize on when it comes to um, biotech or anything that's like scientific? Because I feel like if it's like a SaaS startup, obviously, like there's like the market or like the reviews from like customer, but I feel like that even for biotech, like to find the customers or like to chat with them or like to study the entire industry or like even study the flow of like how like which part, for example, when you mentioned profit margin, I would imagine there is like so many, you know, maybe the government agencies that will like take certain or like maybe give certain amount of like help or whatever. Like I don't know. Like there's like a very complicated processes. So I wonder how do you process them and like I guess like when you are jogging down stuff, like what actually matter, what's not matter for you.
Well, I think any founder that's doing this has also underwritten the space for themselves. So they have a lot of views of customer conversations they've had, and they can often make those available to you. And then you add your own. So just, I mean, I guess to answer your question, I'll go real time. So I'm just pulling up my Dash Bio memo, and yeah, I basically started with description, industry backdrop, market size, team, all the things you might think. Sort of a core 4-point thesis on like how I thought the space was going to play out, what I thought the competitive landscape was, the traction, the key risks, and then quite a few pages actually on diligence, which was like people I spoke to in the bio space, potential customers I spoke to, snapshots from their data room, other founders in the space. I try to get multiple views of like people who work in the space and may see it differently than the founder would see it. So, and then also this is important. We always have a CTO do technical diligence for us. And so we did that. And in this case, I also talked to growth stage bio investors. So if it's a sector like bio where there's like very specific investors, and then I also included like a back and forth with the CEO. So that was my memo since you're
Wow.
asking. But I would say that in these kind of spaces, because the next rounds are often done by bio-specific firms, their view of the world matters almost as much as your view of the world. And so you kind of have to understand that so that you minimize the follow-on funding risk. But the thing you have to be careful of is, I've noticed, especially in bio right now, it's messy because like, let's say you have a great bio team and they want to go pitch Andreessen. If the differentiation is on models, they really should go pitch the AI team. But then people will probably like go pitch the bio team, but the bio team is used to looking at like different types of pharma companies than like the traditional model companies. And so it's harder now, I think, to get the right follow-on funding right, because there's so much more tech in these biotech companies than there was maybe 5 years ago.
I wonder, so like when I guess like for like I guess for like Dash Bio, it's like very I really agree with you on like, you know, the later on runs investors view totally matters. Like I guess like how do you decide on like who do you share the like deal with? And like for example, let's say um like if you shared it with like a very famous like biotech firm, unless like they just never touch like earlier stage companies, like how do you kind of like think about the competitive landscape when you're like sharing something to a certain investors? And I guess like how do you like also like position to the founder that like um the clear like value add, because I feel like the earlier stage investors are typically like generalists, and then you know, like for example for bio specific things, like this person seems like I guess like the founder is like a chief data and AI officer from Moderna, which is like, you know, very I guess like a very it's probably like a hard deal to get into in the first place, because it seems like people with a lot of industry specific knowledge, like how do you kind of like compete with you know, the people position themselves as like an expert in like a particular domain?
So I think it's he is very credentialed and very amazing. So yes, a lot of people interested. Two things. I would never share something that I'm not supposed to share outside of where I'm supposed to share it for founders. I really, really treat that with respect. And so if I'm talking to a growth stage investor, I'm not like sending them the Dash Bio deck and saying, what do you think of this? Unless the founder's like, please send it to them. I'm more getting their views on like the broader space and what they think are pitfalls and what they would want to see in a company if they were to invest in it and all that kind of stuff. And if I think the company can get there. But I think to your broader question, I mean, competing is so interesting these days, but I think I'm a generalist competing in a very specialized world at the moment. And sometimes that'll help you, sometimes that'll hurt you. But I find that at the very earliest stages, it's helpful to have investors who have like been in those really, really messy early stage before, where it's like, it doesn't look pretty. It's not all up and to the right. You don't get product market fit right away. Like it's quite messy. So I think most people that are choosing to work with me early are like choosing to work with Freestyle, frankly, are looking for that, and also like looking to work with you. It's so specific. So I have tailored a lot like how I work with founders to what I think helps each one of them specifically thrive. And so sometimes that means I'm extremely engaged. Sometimes that means I'm way less engaged because that's what they want. And so I think about the person a lot. And so it's really about the founder and what they're looking for at that stage. I do think it'd be unusual for a bio firm not to take a bio VC at some point in the journey, but I think early stages it's debatable. And it depends on what they want, honestly. But he definitely did have offers from bio-specific funds. And someone did ask me how I won the deal. So I guess there was some surprise to your question.
I wonder, so first of all, also like quickly shout out to the other Maria. So I wonder, so like if one of your investments is in the AI manufacturing space. I feel like the traditional space is becoming like very hot these days. Like, but in the AI manufacturing platforms, like there is like so many things that could be automated. So like there are investors on our show that are looking for the like from the factory that are thinking every step of the way that in the AI native way, or like there's like so many things that could happen in the manufacturing world. So like I guess like how do you think about like first of all like in the industry itself, like what are something that is investable, and then second of all like for these specific kind of like deals, like do you typically lean on like towards like maybe other investors, or like do you have to go out there to hunt for example a Maniva or like some other companies like down to from like your own research basically?
Maniva is doing incredible things. It's interesting. I started my career in supply chain, so I've been jaded about technology and supply chain for a long time for, I think, good reasons. Mostly it's a very specific buyer who doesn't really have a budget, isn't really used to integrating technology, has a ton of complicated systems to integrate. And I've seen a lot of founders get chomped up and spit out by the supply chain industry over the years who like go in and be like, oh, this looks complicated, let me fix it, but doesn't really understand it, hasn't lived the pain. I think now it's a different moment. It is the first time. So even though I've been in venture for 10 years and I come from supply chain, I never made a supply chain investment until Maniva because I felt like there wasn't real adoption happening. There's a couple exceptions, but there was a lot of things that were tried and failed. And I felt like now the AI shift, it is the first time that I'm seeing manufacturers actually change the way that they're doing things. Robotics is different. Robotics has been happening for a long time. But AI is really shifting things and shifting quickly. Actually, to your point about writing your thoughts, I wrote a piece on this that I think will go live maybe in Fortune. If not, we'll just publish it ourselves in a couple of weeks. But about how a lot of the automation that the best, most capital forward big companies were doing for decades is now happening to sort of middle America manufacturers for the first time. And I think Maniva is an incredible example because Ray and his team like deeply, deeply understand supply chain. They know what it takes. They know what it looks like. There's no like false understanding of that. They know the buyer. And what they've been really great at is adapting AI for that buyer specifically. And one of the reasons I invested in them is they don't require integration. Literally. That is such a fundamental point in supply chain companies is there's a lot of things you can do that would drive really interesting results. But if you have to integrate into 17 old systems and nobody wants you to do that and everyone is trying to like fight 10,000 fires a day on their own front in supply chain, it just never rises to the top. And they've been burned so many times by like promised ROI from robotics to different tech integrations that if it's not easy to test, it's really hard to justify doing it. And so one of the reasons why I think Maniva is doing as well as that they are is that they've really built a solution that enables people from like literally day zero.
I wonder, so like as for like there's like a lot of like I guess like DeepMind or like these like very like famous companies like alumni, like so obviously you mentioned like the founder has like a lot of integrated like background in robotics or like manufacturing or just like in the space itself. I guess like how do you I guess like select which, for example, the big firm spin-off person to like continue the conversation with, and then how do you stay in touch with them, let's say when you first meet them, like how do you kind of like stay in touch until like they found something that you could be on top of their mind to like be the phone call that they call basically?
Yeah, I think the real question with all these spinouts is, are you a researcher or are you a founder? And I think that you have both, right? And so it's really answering that question. And sometimes people flip between one and the other. So I think that becomes a question. I think in terms of staying on top of people, I think it's just it's just relationship building the way you would in any part of life. And it's just finding ways to help people. So, whether I'm sending them tips on traveling to South America, which I've done in one case, because that's what they're doing right now. We're just finding ways to help people. And I think it's almost like job seekers. It's like I feel like people should choose together. Like if you get someone to take a job at a startup that they're not going to like, it's not a win for anyone. They're just going to turn through each other. But if you help someone figure out exactly where they really need to be, then that's going to be a long-term lasting fit. And so I think at the end of the day, if I think there's an exceptional founder, I will relationship build with them and I will help them in any way I possibly can. And that may be introduced to other VCs that may fund them instead of me. And that won't be great. But at the same time, if that's what was right for them, then that's what was right for them. So I think it's about just supporting incredible people. And I think it generally works out in the long run for sure.
I wonder, so like when it comes to like customer success, so you have invested in a company called Ibista, so based out of France, I believe. So like I feel like on our show, like the most popular founders are all in customer service. We have like the Krista AI founder, the Forethought founder. Last week or like the week before, we had the Pylon founder. So like literally everybody's building in the customer success space. How do you think about the space in general? And I guess like how do you think about like since like the company's built in France and like I'm sure they're like selling globally, but like I guess like how do you think about the geographic location slash like the differentiation between like these like the in the customer service space and like how you kind of like spot this company that you think this company would like win like a certain type of market?
So this is very team driven again. It's two co-founders. They're both incredible. I've known one of them for a long time and tracked him on his journey. It's actually exactly to your last question. Like he was leaving Anchor Store. This is Yvonne. And when he was leaving Anchor Store, I just thought he was really special. And so I just kept in touch with him with lots of things. We did founder dinners in Paris. I would help him think through ideas he wanted to back. I would help him find potential people to build with. I would help him find customers. And then Nico from Anchor Store also joined him. And the pairing is just incredible. And so to be honest, I probably would have backed them into almost any category unless it was like an awful category. But in customer success, there aren't as many of those players in Europe as there are in the US. And they will also sell to the US too, but they've started in Europe. And I think there's a whole Europe-US debate that constantly keeps going down. And I get it. I back great people where I find them, and I find them lots of places. So I would say, do I think the US is incredible and the SF market for AI building is incredible right now? Absolutely, no doubt, right? I've had a couple of companies that I backed move here on their own accord. I would never recommend someone moving on my account because they want to build here. So I get it. But at the same time, you can build anywhere. I think, Lovable is a really good proof of that. But I just back great people where I can find them. And Paris actually has incredible AI talent. And I helped open up Paris for my fund when I was at Kindred in London. The last fund, I helped open up Paris, and the Paris ecosystem, the slope of the change is pretty incredible right now. It's really opened up in an interesting way in the past 2 or 3 years that I think it wasn't opening up in the past. And so from a global mindset perspective, international investors, pitching in English, all of the things that are now a thing, and just they've attracted a lot of talent. So I think for me, it's about, I think I spent probably, if I look at my investments right now, it's probably 70% US, 30% Europe, but it's just about finding the right people wherever I find them and understand the markets. But I think to your point, part of what made me excited is they will definitely compete in the US, but at the same time, there's also tons of opportunity in Europe that most of these companies are not really tackling. And so I think it was about, do I believe in the layer that they're building, which I do, and it was getting smart on that space.
I wonder, so like maybe we could talk about Freestyle VC. So like I feel like one thing that you said like were really impressive was like, you guys you have invested in like 7 companies since last year. I guess like since like the AI era. So like that's like I feel like it's a very high frequency. So do you have like a cadence on like, how fast you have to deploy capital, or like do you kind of feel like maybe there's like 3 deals done in like a month, but there's like 4 other companies that's maybe every 4 months, or how do you think about the cadence on investing?
So I think we definitely have a cadence that we go back to LPs every kind of 2 to 3 years, and we have a fund cycle. And we typically do 1 a month, and that's across 3 partners. So that typically means you do 3 to 4 a year. I'm over that, but I also just closed 4 deals in the last 7 weeks, so that kind of amped up my number. But you just kind of, it doesn't really work nicely like that. Like, even though on average we do one a month, it doesn't mean we actually do one a month, right? It means that there was, like, earlier this year, I think the first 6 months of the year I did one investment, right? And so you see a lot of stuff every month, and then sometimes you get these moments where you end up investing a lot and sometimes you don't. And we have a process. They meet our other partners. They have to cross a certain bar in our process, and that only happens every so often. So sometimes you go faster than planned, sometimes you go slower than planned. I think the back half of last year we were slower than planned. And so maybe it was Q1, but one of the quarters I remember we were telling our LPs that we were just slower than planned that quarter. So it does ebb and flow, and it's kind of always been like that for me in venture.
I guess, like, is there any particular cycle that, like, people are following? So, like, for example, some of them would be like, I guess, a YC cycle, or like, is there any like big trends that, I guess, like, like, basically, if there's like any particular month that produces the most amount of outcomes, or like, and then how do you, I guess, like, track the deals that are like you are looking at on parallel? So for example, let's say today you look at like a bio deal, tomorrow you look at like a fintech deal, but at the same time you have to process both of them. Like, how do you kind of like spend your time and energy into that? Or maybe you
Yeah.
just like do like, okay, let me think about bio for this month, and then like next month I'm thinking about something else.
No, you can't do that. I mean, you have to respond to the market. So
Mhm.
I would probably, it goes up and down, but probably look at 10 deals a week ideally,
Mhm.
and those are in all different spaces. So, but I would say very few of those go to a second meeting, because I think that part of the job that people don't appreciate as much is you look at like 500 things. I'll probably personally look at about 500 things a year, and I'll invest, typically in 4 of those, 7 if we're on a high year. But that means the other 493 or 496, I'm saying no to. And so, and it's not that those are bad opportunities. In many cases, they're great opportunities and they're great people doing interesting things. And so you have to get pretty quick. And I think it's really good to founders to pass quickly if you're going to pass. So I would say the funnel for me that goes to a second and a third meeting is much lower. And then those, the ones that gets invested, is obviously much lower. So it's definitely a funnel. And I think each week it's really, for me, about finding the teams that just like, I feel like I have to work with, and then doing the work on that space to get up to speed to where I need to be to make a decision. And I try to run at a process within a week or less.
Do you like maybe if you could share with us a little bit more about like Freestyle's like decision making process, like since like each GP ran their own like source
Yeah.
to diligence to like win and stuff, like
It's very like independent and empowering, but it's also very much a team, which is great. I'm super lucky to have Dave and Jenny as partners. And we have a CTO named David Bill, who does a lot of our technical diligence. And then we have a wonderful EA named Maria, another Maria H, who I think is actually just commenting. That's the whole team. So we typically have one partner build conviction first. So one of us has 1 or 2 meetings, really likes the team, then they'll meet another partner. Depending on what we're optimizing for in the process, they will maybe meet the third partner. We'll do market diligence, they'll meet our CTO, and then we basically decide. That's it. So we don't have like one IC meeting with the founder and all of us, but they end up meeting us kind of in individual sessions, if that makes sense.
For sure. As for like maybe portfolio construction and fundraising, like how do you think about like follow-ons? And then since like I feel like well, based on my research, you guys write like, 10 to 12 check per year, and then that means like maybe 36 company. I guess like 30 to 36 company, like kind of like leaning towards more of like a numbers game approach. I heard the medium was like 28 or to 32 as like normie funds construction, as like that's how many deals that you kind of invest. But like, how do you think about full on lead, not lead, or
So
all that kind of stuff?
we always lead or co-lead. We typically write 1 to 4 or 5 million into a round. We lead or co-lead. We are what I call high conviction, high ownership seed fund. So we typically have about 30 companies per fund. It can be plus or minus. It can be 28, it can be 34, but about 30 per fund. You also have other seed strategies that are like follow, and they have 60 or 70 per fund. So it really depends on the strategy. Ours that's really worked for us across the years. We've been very consistent with it. And I think it allows us to also have space to work with the founders in a deeper way, which is great. And you asked before about sort of YC or whatnot. Like, it really depends on your strategy. So a lot of YC deals don't meet our strategy, even if we like the founders. So we've thought about that a lot. But I know funds that like their whole strategy is YC. So obviously they're much more like rotating around the YC demo day. I mean, we put in our calendar, I block off the 2 weeks before more than I usually would. And so it is like we do respond to all those things, but we're not really driven by it. We're driven by great founders, we find. And I think because it's a small partnership, the other assumption is that if we meet a founder we really love and we're like bringing it to the partnership with high conviction, then you drop everything and you reorient your week around that situation.
For sure. Do you guys, I guess like the other question I had was like, how do you balance like fundraising as a GP versus like, deploying capital at the same time? Like, or is there like a period of time that you're like, let me just block this off, like to just like flow to Europe and fundraise? I'm not saying you have like Europe LP or anything, but I'm like, I feel like I constantly hear people about like going to other places to go like super return or something to like raise. How do you kind of like balance the raise and deployment cycle?
So we're kind of always talking to LPs. So I mean, this is really Dave and Jenny, and especially Dave. But I feel like Dave and Jenny have built a fund with some incredible LPs, and so we actually have a pretty concentrated, like really high quality LP base. And so we talk to LPs quite often, and so there's a constant conversation. And I think then there's the moments where we raise, where there's like a more official 6 to 7 months where we go to market, which is actually faster than I think most people probably do. But that's typically what it's looked like for Freestyle. And I didn't answer your question about reserves. We typically do 50% reserves, but on the fundraising cycle, you do have moments where if you're fundraising, the reality is it just takes more of your time during that 6 months, but you're still looking at deals and deploying and whatnot, but it does take more of your time. And the rest of the time you're just talking to your LPs on a regular basis. Sorry. And I actually love that. I feel like the LPs have such a different perspective than we do. I think it's really helpful sometimes to just see it from a different perspective.
Love that. I wonder, so like I guess like since you have also worked in Europe, like you mentioned that your husband's Italian, so like I guess like what does a Europe investing scene kind of look like? And then how do you feel like it's like different or like similar to the US?
I mean, I think I think there's a lot of criticisms of Europe that are fair, right? About exits and what the market looks like to go public and all those things. But I also think on average, the US underestimates Europe. I think there's some incredible GPs. I know them intimately. I think intimately is probably the wrong word. I know them well. Fun of being live. I know them well. And then there's also a lot of incredible founders. I think it's a very spread out ecosystem, so you have to find ways to cover it. I think the biggest challenge when you go to Europe at first as an American investor is you have to change your understanding of what you look for in a founder, because and you have to have a lot more cultural nuance understanding per culture, right? So like a Danish founder is never ever gonna like rave about themselves. They're never gonna, I mean, like that's posturing, right? Like they're never gonna tell you that they're great. And so you have to like really ask about them and like find ways to get information out and find different ways to understand them. But I also feel like sometimes I overcorrected the other way. I'd be like, well, every Danish founder is amazing, but like isn't telling their story this way. And there's things in France that you have to learn and things in Italy. And so I think you have to actually, what's really funny is it shows up also in reference calls, like not just founders, but I think in general, European founders are less coached than American founders. But sometimes they give you very different answers. Like I remember my first week investing in Europe, 2 of my pitches on a Friday both gave me like a less than 10 million ARR plan 5 years out. And I was like, this doesn't seem right. One of them just like, I think just was not really a venture fundable business and probably shouldn't have been looking for venture. The other one was like, yeah, he's like, this is my plan if I bootstrap, but I'm going to raise and then I'm going to get to these like 200 million. I was like, well, you should probably put that plan in when you're talking to investors. But it was like, it's just very genuine, you know what I mean? And so I kind of like that because I feel like it's just like, there's a lot more, it's just less, here there's much more playbook and this is the slide you should put and this is what you should say. So you almost have to like discount it the other way when you're here. You have to learn the nuance, but especially in reference calls. I remember, thank goodness I'm married to an Italian, but it was like a science type background. And it was a company I invested in, but I reference checked. And the first 15, 20 minutes of the call, he's just like complaining about the person. This is a reference the founder gave me. He's like, well, he could be better at this, and he could be better at that, and he could be better at this. And I'm like no American reference call would ever be like that. It would be like, they're awesome. They're awesome. They're awesome. And, but it's funny because I'm married to an Italian. I know they're very critical. My husband used to be a PhD physicist. Like I know that scientists have a very high bar. So like 15 minutes into this call, I'm on it with my partner actually because we did the deal together. And I was like messaging her like, let me just try something different. I was like, we were like, why did he give us this reference? And I was like, you know what? This is an Italian thing. They're not going to rate each other. I was like, okay, if you had to put him in the top X% of people you worked with, what number would X be? And he's like, 1%. I was like, would you work with him again? He's like, in a heartbeat tomorrow. Is he hiring? And I'm like, okay, let's go to like what he's good at. Let's ask the questions differently because I usually do the hard stuff, and that's what I was doing. But he was just being super honest, and you have to kind of know the cultural nuance to like get to the right reference, if that makes sense.
Oh my God, that's so crazy. Just because I feel like, yeah, like I've never thought of like people would just like being so criticism. Like I mean, like the culture difference is like definitely very important to like play there. And then, I want to be mindful of the time. Maybe we wrap with like a quick 1 minute fire round for you.
Sure.
Okay, what's your favorite book?
Oh, lots of them, but I always say Victoria's Song, Bending Reality, because everyone should read it.
Who would you invite to your dinner party?
Alive or dead?
It's your party.
It's my party. Oh man, that's a good question. So many people. Right now I'm gonna say Michelle Obama.
Oh, love. So who made the biggest impact in your career?
Oh, I have so many of those. It's unfair. I have so many. I have like 10, but they know it. I tell them all the
Okay,
time.
yeah, okay, perfect. Maybe list two. I'm just kidding. Wait,
One of my early mentors, Mary Blend, she was incredible. Martin James, Stu Elman from RRE. I think there's a couple people I've worked with incredible people. I've been very, very lucky on that front, but there's just some people who've just really kind of shaped my career trajectory in a different way and made me think differently. And I will forever be thankful for those people.
Love. Where can we find you outside of work?
Can I go back to that question for a second? And then
Yeah.
about the mentors, one thing I don't think we do enough, and I've been doing a better job of this recently than I used to, is like just telling people when we love and appreciate them. Like we think that they know and they don't. Like Mary Blend, one of the names I gave you before, I'm now in touch with her a lot, but I didn't talk to her for like 10 years. And then she came to London. I was in London and I actually started crying, but I just like thanked her so much for this like very specific moment where she really helped me grow. And it was actually quite painful at the time because I'd really failed at something. But I feel like sometimes we don't tell people the things that they know we think about them. Where can you find me? Coffee shops all over San Francisco. I usually run the Founders, so you can find me wherever founders have coffee in San Francisco or at our office, but lots of coffee shops. And online, you can find me on Twitter, LinkedIn, Substack.
Love that. You want to plug your Substack? So, yeah, you want to plug it?
Sure. I don't even know how to plug it. Unconstrained. I'm writing about AI and venture, and I have no idea if it's going to be any good.
Oh, yeah, just like drop the link to the private chat, and then I'll drop the link to the comment.
Yeah, perfect.
So like people can find you and subscribe.
Private chat. Oh, there we go. Yeah, got it. Yep, it's there.
Okay, so let me just like post on the comment. I'm like, but like the last time I posted was like literally just on YouTube, and then people think I'm like crazy. But oh yeah, as of course only on YouTube. Okay, I'll like post later. Okay, love that. Well, Maria, thank you so much for coming on the show today. It was such a fun conversation.
Thank you for having me. It was great to chat.
Okay, let me quickly